The US inflation data serves as a catalyst for market sentiment this week. Indeed, this information will provide clues to the Fed's further policy moves. The minutes of the last Fed's policy meeting will be on a tap tonight. The content is likely to confirm the extremely aggressive rhetoric of the central bank about the high inflation. So, the Federal Reserve will reiterate its commitment to bringing consumer inflation down to the annual level of 2% despite all headwinds. No wonder the Fed's hawkish stance is always bullish for the US dollar, and you're watching a regular video calendar on InstaForex TV channel. On a Thursday morning, market participants will get to know the revised CPI for Germany. The annual rate of consumer inflation accelerated in September to two-digit values over 10%, the fastest reading in the history of such surveys. Consumer prices have been surging due to the simmering energy crisis and ongoing disruptions in supply chains. The largest economy in Europe has been affected by this negative trend. It means that the situation is no better in 27 EU countries. In turn, the ECB has to resort to aggressive countermeasures. Unlike the European Union, the pace of headline inflation in the United States has been slowing down as a result of a series of rate hikes by the Federal Reserve. The Federal Open Market Committee aims to push inflation down to the annual rate of 2%. For the time being, the CPI is expected to dip to 8.1% on a year in September. The economic conditions in the US are way stronger than in other countries. The labor market is healthy. The domestic economy has been expanding at a steady pace, according to the authorities. Hence, the Federal Reserve is likely to raise the key interest rate by another 75 basis points in November. Nevertheless, market participants are poised to fix profits on the long positions on the US dollar in response to the evidence of easing inflation in the United States. Meanwhile, markets are regaining the appetite for risk. Perhaps traders will cement the risk-on mood in the light of the report on China's inflation. Let me remind you that China's monetary authorities set the target level at around 3%, and analysts project the annual Chinese CPI to rise to 2.8% in September. On a Friday, the economic calendar contains another report that enables traders to judge on the US economic conditions. Market participants closely watch any data on consumer activity. Importantly, more than two-thirds of the US GDP is generated by consumer spending. Thus, the dynamic of retail sales will shed light on further trends in the US economy. In the report for September, markets could see further increase in retail sales. According to the consensus, retail sales could have inched up by 0.2% on months, and this could arouse cautious optimism on Wall Street, and the benchmark stock indexes will have an excuse to make a short-term upward correction. On the other hand, don't forget that the season of corporate reports will kick off on Friday, and they will be of major importance to determine the trajectory of the stock market. And that's all for now. You have watched the Forex Trader Calendar on InstaForex TV channel, and we wish you profitable trading. Subscribe to the channel and follow news with us, and see you soon.